Morning, welcome to HYCM's FX workshop. Oh, let me just correct this. It's the workshop today, not the live market analysis. And we're looking, of course, at the Bank of Canada interest rate decision. So really looking forward to the decision to the thing we have today. Don't forget, this is the workshop here. Don't forget, as we talk about different entries, exits, all of this is from a educational perspective. I'm going to outline what I'm looking at from the Bank of Canada and how I'm looking at trading it. Obviously, we all trade our own capital, so this is not a signal trading service, but an educational one. Those of you who attend regularly understand how this works. And the Bank of Canada meeting at 3 o'clock UK time, so that's in 90 minutes from now. Very warm welcome to you. Glad so many familiar faces could make it. Good to see you here and looking forward to the session. So without further ado, let's get stuck in. I'm assuming that everything's working okay in terms of my voice and screen. I think everything's okay, so that should be all right. Right, let's go and take a look. Now, trading the Bank of Canada interest rate decision is going to be a very interesting decision for us to trade. Now, if you go along to HYCM's blog, and I'll just show it here, I'm going to put this in the chat. Every central bank meeting, and I miss very few of them. Maybe if I'm on holiday, I might miss the odd one, but I cover every central bank meeting here under the market fundamentals tab under the central bank watch. And this was the last Bank of Canada meeting. And it was very interesting what happened with the last Bank of Canada meeting, because they had already indicated that they would be holding rates at their current levels. And prior to the meeting, there was no significant data that was saying that Bank of Canada were going to shift away from that strategy. So the meeting was as expected, and they held their interest rate decision. The CAD's been sort of stuck in this range. And the key area to really watch is what's going on with the inflation data. Now, the obvious trade after the last Bank of Canada meeting decision was any high inflation data would likely mean the Bank of Canada would be more likely to hike interest rates, and that would be positive for the Canadian dollar. So let's just look at the latest data we've had. So if you look at the headline inflation data, do you see? It's continuing that headline trend falling lower. And then look at the core inflation data, right? And you can see that's continued to move lower. And the month on month is maybe picked up, but the core on core, the core is still heading lower. So that's all saying that the Bank of Canada is heading in exactly the right direction. Now let's just see if we can see what the CPI median is. Let's see if we've got that here. Yeah, and you can see the CPI median year on year is also falling, right? And that was the lowest reading since March last year. So pretty healthy fall. Okay. So when we're looking at all of this, we are seeing some, decent data that's been coming in for Canadian inflation, which just takes all the pressure off the Bank of Canada in terms of hiking interest rates for today. Now, let's look at what market pricing is, and I'll show you how we put all this together. Looking at market pricing, we can see what we're looking at here is short-term interest rate markets. Now, short-term interest rate markets tell us what the market is thinking about the path of rates. And at the moment, we can see that currently markets are expecting the Bank of Canada to hike interest rates twice this year, right? So they are expecting 2 more hikes from the Bank of Canada. And if you look at the exact breakdown for today's decision, and this was just updated half an hour ago, you can see that markets are seeing a 58% chance of a no interest rate change, but a 42% chance that they're going to hike by 25 basis points. Now, let's also compare this with the economist projections. And you can see economist projections are also split. they are seeing a low expectation of no change and high expectations of a single change. Now, the beauty of this kind of decision, and let me explain this, is that if the Bank of Canada do hike interest rates, then all this pricing has to be repriced. And if they don't hike interest rates, then all this pricing has to be repriced. In other words, this split is quite helpful because it should mean there's a short-term reaction in the CAD, whether they keep interest rates unchanged or whether they hike by 25 basis points. Both sort of sides stand to see some repricing. So that's helpful because it means that we could potentially see some upside or downside in the Canadian dollar, regardless of the decision, because of the way the pricing is evenly split. So at the moment, to put this into simple language, it's a coin toss, 50-50, whether the Bank of Canada hike interest rates by 25 basis points or keep them unchanged. And that is a sort of helpful dynamic for us to be aware of heading into the decision. And that ultimately gives us confidence to either, but that gives me confidence to either buy the Canadian dollar if we see a hike, or sell the Canadian dollar if we see no change. So that's really helpful. And we see that the economists are also reflecting that pricing. So there's nothing from the economists to kind of change those expectations. Great. So now the next part of the process that I like to do is to find, well, which currencies will I be pairing this with? Okay, which currencies make sense for me to pair this with? So what I want to do is I want to go and look at just the currencies for the day and just see how the currencies are doing for today, and we'll have a look. If I want a different chart, that's the chart I want. And you see here, I have a breakdown of the strongest and weakest currencies of the day, right? And what I can see is that the strongest currency of the day is the Aussie dollar, and the weakest currency of the day is the New Zealand dollar and the US dollar. So you can see strong currencies, Aussie pound, weak currencies, US dollar, New Zealand dollar. So that's very helpful. So that means if I see reasons for CAD's strength, I would want to pair it with a weaker currency. So I'd want to pair it against the US dollar. If I saw reasons for CAD weakness, I'd want to pair it against a stronger currency. So I'd want to pair it against the Aussie CAD. So straight away, I've got two currency pairs that I'm looking at. One, US dollar CAD, two, Aussie CAD. So let's just run through what I'm anticipating. If the Bank of Canada keep rates unchanged and there's no hike, I'd expect that to allow the CAD to weaken, and I'll expect Aussie CAD upside. That is if there's no hike. If they do hike, I'd expect the CAD to strengthen, and I expect it to strengthen against the US dollar. So I would expect US dollar CAD downside. So let's look. So in the situation where we see no interest rate hike from the Bank of Canada, what I'd expect is I'd expect the Aussie CAD pair to move higher, and I would be looking for a short-term scalping opportunity just up into that 0.89, that R2 pivot point. That would be an obvious target in the event when the Bank of Canada do not hike interest rates. The alternative would be if the Bank of Canada do hike interest rates, I would then expect the CAD to strengthen, and obviously with the dollar being the weakest currency of the day, I would look to short the US dollar CAD pair. And I'll just drop down to the lower charts, lower time frames, and I can just see that we've got you know, look at the higher time frames, you see, okay, got some pretty decent support here, very decent support level. And you can just see that near-term trend line. That really is a key level. And you've got the S2 level just sitting above that key trend line support. So that tells me that this region is a clear and obvious target if there's a situation where the Bank of Canada do hike interest rates by 25 basis points. You'd expect that to move us that 133.50 area. Now, my sort of expectation is they're not going to hike. Why do I think they're not going to hike? Because of how inflation is at the moment. You can just see that median inflation's falling. You can see the headline inflation's falling, and the core inflation is all falling for Canada. And that's pretty good. You know, if you compare like Canadian inflation with other countries, you can see, look, it's towards the lower end of the major countries, certainly towards the lower end of the G20, right? You can see here, you've got the US higher 4.9%, Euro area 6.1, UK look at 8.7. So, you know, inflation is pretty strong there for those countries. And if we just take a look at the core reading again, see that's definitely moving in the right direction. Just compare the core inflation with other countries. You can see, oh look, you know, Euro area it's 5.3, Germany 5.8, UK it's 6.8, so pretty, you know, pretty strong core inflation. So it's not too bad in Canada. So I don't see, for that reason, a major risk that the Bank of Canada are going to need to hike interest rates. But I'm not going to ignore what the market's saying, because look at short-term interest rate markets. They're pricing in a 50-50 chance, you know. So they're in favor of no interest rate hike. And it's more an outside chance that they will hike by 25 basis points. Or, you know, it's like a 40-60 split, roughly. And I think that's fair. And I do think that's helpful. So just run through it again, what I'm anticipating. Hike by 25 basis points. I would expect that to weaken the US dollar CAD pair. If they don't hike, I'd expect the Aussie CAD pair to move higher. So no interest rate hike, I'd expect the Aussie CAD pair to move up. The Aussie CAD pair to move up to that R2 pivot point. If they do hike, I'd expect the US dollar CAD pair to move to that S2. So I'll just be looking for a short-term scalpable opportunity. The other thing, for a potential longer-term opportunity, what you need to look at is the forward guidance from the central bank. So what do they say about future path of rates? Do they say we're going to start looking at interest rate cuts? You can see here, look, markets are pricing in 2 more rate hikes this year. But if the Bank of Canada say we're keeping rates as they are, and we're not expecting to hike interest rates again, we think we've reached terminal rate, we think we've finished with hiking, in that case, you'd expect the CAD to weaken further, and you could expect the Aussie CAD pair to run even higher. So that's definitely something to look for, okay, as we head into the Bank of Canada decision. So are there any questions? I'm just going to give folks a bit of time to see if there's a question, anything you're not clear on. Anything you'd like help with. But that's my basic fundamental outlook for today, for that Bank of Canada decision. Next week, we've got some really good data points. We've got the US core PCE. So just as waiting, I'll just share with you next week a little bit what's coming up, right? Now, next week on the, what day is it? I think it's the Tuesday. Where is it? No, it's not. It's on the Tuesday. I'm pretty sure. Yeah, you see that core inflation, the US inflation data right now. if that inflation data comes in really weak next week, and look, the core is expected to fall to 5.4%, and the headlines but to fall to 4.7%, and the prior reading for those data points were 4.9 for the headline and 5.5 for the core. So expected to fall lower. So that should support gold. So into the Fed meeting next week, and I'll be covering that on next week's workshop. I'll explain to you exactly what I'm looking for and what I'm expecting from stocks, from gold, from the dollar. But if this, watch out for this on Tuesday. I will cover this on Monday next week, but watch out for this on Tuesday. If this comes in a big miss, so in other words, if this comes in below whatever the low expectations are, you have to come back on Monday to see that. If it comes in below the low, you'd expect gold to absolutely rocket higher. Okay, I took a nice trade on gold this week on this data point when we saw this big miss in the ISM services PMI. That big miss that came in, I knew that would weaken yields, weaken the dollar, and I took a lovely scalp higher in gold this week. And I'm hoping to do the same again next week if we get a big miss in inflation. I'm expecting personally inflation to fall lower. I do think we're in a deflationary environment at the moment with the artificial technology boom that we're seeing, and it's revolutioning a lot of workplaces and will revolutionize a number of workplaces. Then, you know, what we need to look out for there is higher productivity, and that's deflationary. Okay, it should pressure the jobs market and it should be a deflationary thing. But at the moment, you see gold is trying to break out this trend line. It's trying to hold that 100 exponential moving average. And what it needs is some very weak inflation data, and that can push higher because yields will drop, dollar drop, and that should be positive for gold. So do come back on Monday and check out that. On Monday, it should be a decent workshop webinar to look at. So they're back on Monday, and we're getting ready for the week ahead. Okay, folks, I think everybody's clear. Hope everybody's okay. Hope that was all clear for everyone. Very good to see some good faces here. Take care. Look out for that Bank of Canada interest rate decision. It is in just 1 hour and 12 minutes. So it's one definitely not to miss. Take care, and thank you all very much. Goodbye, everyone.